Hey, welcome to SMC Unlocked. Imagine this is our trading market. At this exact level, banks and big institutions are waiting with massive limit orders. The moment price taps this level, boom, a strong, impulsive move begins. The zone that triggers this reaction, that's called an order block. In this video, you'll learn what an order block really is, how to find it with precision, and most importantly, how to trade it profitably. Get ready, because this is not just basics. This is one of the most advanced order block trading strategies you'll ever see. An order block is an area where a large number of limit orders are placed. These zones are mostly created by smart money. And there's one golden rule you must always remember. Smart money buys on a sell candle and sells on a buy candle. There are mainly two types of order blocks: classic order block, algorithmic order block. In this video, we'll focus on the classic order block. To trade a classic order block, we must identify 5 conditions on the chart. If even one of these conditions is missing, that order block becomes invalid. First, liquidity sweep. The market must sweep liquidity before reacting. For example, look at this chart. Here, we have liquidity resting below these lows. The market dips down, takes out that liquidity, and only then makes its move. That's our first condition. Second, market structure shift. After sweeping liquidity, the market should break the recent high and close above it. No break of structure, then no valid order block. Third, displacement. The leg that breaks structure should move with strength and speed, not slowly. That impulsive move often creates an imbalance, also called a fair value gap. So, inside the same leg, we identify and mark the FVG. This becomes a strong confirmation. Fourth, premium and discount zones. Always mark your premium and discount levels on the chart. When we are looking to buy, our order block should always form inside the discount zone. And when selling, it should form inside the premium zone. Remember the golden rule. Smart money buys at sell candles in discount and sells at buy candles in premium. Fifth, inducement. Before price comes back to test the order block, the market must trap retail traders. This trap is called inducement. It's very important because smart money never moves without shaking out weak hands. Only after inducement, when price returns to the order block, we take our entry. And that's where we usually see a strong move. Now, let's check all 5 conditions step by step on the chart. First, we mark liquidity and the market sweeps it. Condition 1 complete. Next, price breaks the recent high and closes above it. Condition 2 complete. The same leg shows strong displacement and forms a fair value gap. Condition 3 complete. We then mark premium and discount zones. Since we are buying, we look for the order block inside the discount zone, and we spot a sell candle that is our order block. Condition 4 complete. Finally, we see inducement formed before price touches the order block. After that, price taps the order block and boom, a powerful move starts. All 5 conditions are met, so this is a valid classic order block trade. To trade classic order blocks, you must confirm all 5 conditions. If even one is missing, don't take the trade. This was the classic order block explained step by step. In the next video, we'll break down the second type, the algorithmic order block. And I'll also share short videos with live chart examples so you can practice better. Thanks for watching and stay tuned.